Hello, I'm Matthew DiGiacomo with Core Financial Group in Yuba City. Welcome to our monthly market update video. We pride ourselves on keeping our clients updated, and we hope that you find the following video informative. This data is from mid-October to the week of November 15th. Keep in mind that although the data is recent, markets and economies do move quickly, and some of this may be outdated by the time that you see this video. Now, with disclaimers aside, let's talk a little bit about what happened over the past month or so. The overall theme for the last month has been positive. The U.S. consumer sentiment has improved slightly. The yield curve has returned to a more normal status, which we'll discuss further in a moment. And trade discussion progress between U.S. and China has improved. All of this has driven the stock markets higher over the past month, and that's a good thing. So what's going on? The Federal Reserve did lower their rates a quarter of a percentage point to a range of between 1.5 and 1.75%. This is an important measure because the lower interest rates mean that banks are able to borrow more cheaply, and therefore more movement of money is going through the economy. This theoretically is a boost to the economy, and the stock markets generally react positive to that news. As mentioned above, the yield curve has slowly returned to normal. So what does that mean? Well, the yield curve refers to the relationship between short, intermediate, and long-term interest rates. A normal yield curve will have short-term interest rates be lower than longer-term interest rates. That's normal. Earlier this year, we had a flat to inverted yield curve where interest rates on the short end were actually higher than longer-term interest rates. That is considered a negative thing. Recession sometimes does follow that. However, this year, now that we're returning to a normal yield curve, that's viewed as a positive move. In other positive news, a trade deal between the U.S. and China does seem more likely, which encourages companies around the world to invest more and trade with other companies and other countries. Overall, the stock markets have reacted positive to all this news, and in fact, last week they hit all-time highs. On the negative side of things, the economy does still have a few areas where it's showing signs of weakness, and it's been a long time, over 10 years, since we've seen a decline of 20% or more in the U.S. stock markets as measured by the Standard & Poor's 500. Overall, the bottom line is that the economy has been improving, the stock markets are at all-time highs, and things are overall pretty good. We'll continue to update you. Thanks for watching, and we'll see you next month.